morning. It is Jobs Day in the United States. This is Yahoo Finance Live. I'm Julie Hyman. That is Brian Sozzi right next to me. We are about 5 minutes away from the jobs report for the month of February. And we, of course, have the backdrop of what's going on over in Russia and Ukraine. Russia, of course, its invasion of Ukraine ongoing. So that sort of very much on investors' minds this morning, even as we wait for these numbers. We are seeing futures indicate a lower open at the moment. That, of course, could change in a few minutes after we get the numbers. But overnight, Russia, its incursion into Ukraine, affecting the largest nuclear power plant in Europe. It does seem like there is no sort of leak there of radiation, but nonetheless, that raising some alarms overnight. Let's talk about the expectations for non-farm payrolls quickly here. 423,000 is the consensus estimate coming to us from economists. The unemployment rate forecast to fall 0.1% to 3.9%. We're watching that number closely. And as always, we are also watching average hourly earnings forecast to have risen 0.5% on a month-over-month basis and saws 5.8% on a year-over-year basis.
Yeah, I'm locking in, Julian, a couple things, but chief amongst all those here is dining activity in the month. And good chart out of Goldman Sachs. Jan Hatzius is here, their chief economist, looking at dining activity in the month of February. All signals point to that being a helpful boost to jobs in February. This chart noting here, the main takeaway is that activity at restaurants have reached back to pre-pandemic levels. And with that, of course, you need more servers. You need more people behind the bar serving up those well-liquored drinks and shots of tequila. So that may have helped jobs last month. And Julie, of course, look, the next thing to be on the lookout for is, of course, the market reaction. This report can essentially come in at 1 million jobs or more. I'm not saying it is, but it could. And you're still likely to get that rate hike of 25 basis points in a few weeks.
Yeah, and that maybe is part of the reason why you see such a disconnect right now in public opinion and public sentiment between the economic backdrop and the feeling around the economic backdrop, right? So Liz Ann Saunders over at Schwab this morning flagging the latest Gallup numbers on public sentiment surrounding how people are feeling about the U.S. economy, and they're feeling pretty much the worst that they felt since the beginning of the pandemic. So only 26% see the economic outlook as getting better, and 70% view it as getting worse. Now, maybe the job growth is as good as it's going to get. We do hear from economists that economic growth is going to slow to some extent, but it's still going to be growing. Gasoline prices probably playing a role in all of this. You have been laser focused on that issue and its impact on sentiment. But I am struck by the idea that we are likely to get, economists forecast we're going to get a big addition in jobs in the United States at a time where people are feeling pretty lousy about the U.S. economy.
No, right. And you're starting to see in some of these retail earnings or these outlooks, Julie, but that's a discussion for a different day. The reality is we talked a little bit about this yesterday. This is a market fixated on what is next from the Federal Reserve. Just think about it, Julie. We are waking up this morning here seeing images on Twitter, social media, and news of Russia overtaking a nuclear power plant in Ukraine, and the market is not even down that much here. So I think the market wants to see, of course, what this jobs number is, but what it means for interest rates. And as we heard from Jerome Powell this week, Julie, we're only likely to get 25 basis points later this week. So let's root for a good number here.
Yeah, and at the same time, Jerome Powell and the White House, for that matter, have been very clear about trying to control inflation. The White House, for its part, talking about being very cognizant of that rise in gasoline prices. So all of this sort of mixing into the sentiment surrounding this report today. Just want to quickly, again, bring you the setup here in terms of what we're seeing in the markets right now. We are seeing an indication for a lower open here this morning. Futures right now pointing to a decline of around 0.8% at least across the board. And we're watching the Treasury market as well as we have been in advance of this report. It's been very interesting, the action that we have seen in Treasuries, which have caught something of a bid over the course of the week. Because of being seen as a relatively safe place to park. But you can see right now the yield on the 10-year in particular at 1.84% as we head into this report as Jerome Powell was so clear about what the direction of interest rate increases is going to be. And we should be getting the numbers out any second now as we're watching. I'm seeing the unemployment rate, 678,000 jobs added in the month of February. That is much higher than estimated. Again, the estimate 423,000 jobs added last month, 678,000. So a big beat here when it comes to the number of jobs added to the U.S. economy last month. The unemployment rate ticking down even more than expected, 3.8%, the unemployment rate in February versus the 3.9% estimated and 4% in January. Average hourly earnings, though, here's the fly in the ointment, remaining flat in the month of February. No growth in average hourly earnings on a month-over-month basis, and year-over-year up 5.1%. And P.S., that's not real average hourly earnings. That does not account for inflation. So one could argue if it was flat month over month, because of the changes we've seen in inflation, people actually earned less on a real effective basis last month, which I think is something that is important to note. I'm seeing here private payrolls as a portion of the total, 654,000 manufacturing payrolls growing by 36,000. Not huge revisions for the prior month. And Soz, so pretty remarkable increase here that we saw in jobs, and showing also perhaps the persistent difficulty for economists in predicting month to month what these jobs numbers are going to look like.
And look at that. You're seeing the futures here come back off the worst of the session. Interesting reaction here, Julie. A couple things caught my attention. Of course, we're still going through these numbers. First, you want to watch some retail stocks here. What you just highlighted, Julie, with wages not even growing in an environment where consumers are going to go out there this weekend, buy gas for their cars or SUVs, and it is likely over $5 a gallon. That is a red flag, because that is essentially purchasing power on the parts of consumers going up in smoke. Next thing, telework. Lost in the shuffle of all the focus on Russia and Ukraine is that the pandemic is in fact easing. That showed up in this report, guys. 13% of the population teleworked in the month. That is down from 15.4% in the prior month.
And I just want to run through the sectors real quick before we get to more market reaction here. Leisure and hospitality jobs, that's what you were watching closely, up 179,000 in February. Food and drinking places up 124,000. Accommodation up 28,000. Professional and business services also strong, up 95,000 there. Healthcare up 64,000. Construction up 60,000. Transportation and warehousing continue to show strength there, 48,000. Retail, 37,000. I mean, I'm just seeing a lot of different areas of strength here, pretty much across the board. We saw information and government. Those were the two areas where there was little change in the gains in jobs, Soz.
And Julie, we got some upper revisions here. December revised up 78,000. January revised up by 14,000. And this is going to be a question put to every guest on here. Julie, the Fed is in a very tough spot. Clearly, the economy is gaining steam. And clearly, the Fed is behind the curve on fighting inflation here. It's a big pickle, a huge pickle for Jerome Powell to be in. And for the markets, ultimately, I think.
Well, he said he's 25. It sounds like it's going to be the number in March, no matter what, at this point.